More than all, so we're not out the woods yet. We're still seeing some bears emerge. You'd thought perhaps they'll be given up, but we saw them re-emerge out of their hibernation, and they're still in the FTSE 100. So it's okay. If they were selling the US 30 or the US 500, I'll be a little bit more concerned. But they've gone quite bearish on the UK 100. So it's not like a massive index, not like the S&P. So I'm not too concerned, but it's kind of annoying because ideally we treat them all equally. Perhaps we shouldn't, but we do currently. But just to say is that because they'd sold the UK 100, it's impacted our big picture, which is a bit frustrating. But the technicals rose. We're actually really strong at 92, so I can reset that now. And so, you know, we saw a VIX didn't really get crushed. It only sort of got subdued. Normally that gets crushed, but it's only a small move, so it's interesting. The dollar fell, and also the treasury yield, the 10-year, also fell as well. We'll have to see today. Today's going to be really important for risk appetite, and there's the change from last week. So DAX is making more of a sell, whereas the UK 100 is slightly more of a buy. So got to be careful. Okay, QDB scores. Now the new thing here is that we don't have sorting. It's just alphabetical now. That's how we do it. We're not going to change it. There's no like option to sort any of these columns, and that's just what we'll do. We'll leave it as it is. But the reason for it is that we're using this calculation so we can see the open interest, and it makes things a lot more simpler by having it in A to Z order. Okay, and so we can see the dollar is definitely swamping the market. The yen got crushed yesterday from the moves that you saw, the parabolic moves on the yen, and it looked like a stop hunt, and this tells us that it was in fact a stop hunt, and we can have physical proof of what's going on. We can see in real time what's happening in the forex market. Okay, so this was a lot larger yesterday, and so what we're going to do now on a daily basis is take a screenshot of this, and so when you come to your desk, when you get home, you can see, all right, this is how we were in the morning UK time, and this is how we are now. And so what's happened with the pound, it got bullied, stops are raided. And so I think the next thing, because we're still new and learning this pie chart, it's brand new, it's only yesterday it got created. I think euro is the next target, because it's now bullied the pound, and it's going to go for the next large target, which is the euro. Okay, and then after the euro, it'll probably be CAD, and then it'll just fluctuate. And then if Swiss franc gets larger, then it'll bully that. And it's just going to just target and punish the traders on those particular currencies. So that's the pie chart. Robot. Yeah, remember we are just looking for break even because we're still doing like vanilla tests. So I'm quite happy to have like a break even. I'm not really after like profits. We're just testing the logic, and we're testing the SLTP. So that's fine. We're having an okay week so far, but we're just testing the break even because the TP and SL are equal. It's 25 pips for TP, 25 pips for SL. So we should at least be breaking even, going by the logic, and it's also testing the timing as well because we've got them every 2 hours, which seems to be okay right now. And so once we're happy and we're breaking even slash making profit, then we can look to increase our TP to 26 pips, to 27, to 28, to 29, 30. But whatever happens, we'll keep this SL, the stop loss, at 25 pips, but we'll increase our TP. So what we'll do, we'll increase the risk multiple over time. Okay, and we're going to gradually increase in increments the take profit. So remember, we're just still testing. We're just doing like vanilla tests, like I say. And then it was good testing because we know when to trade and when to avoid, and we're going to avoid the PCE on Friday, so there won't be any trades on Friday. Okay, and so obviously we're going to avoid the NFP and the CPI and the FOMC. So now we know that that's a good test, and then we're going to just simply increase the TP over time. So it won't be a 1R, it'll be 1.2R, 1.3, 1.5, and then hopefully we get to like 2R, and then that'd be fantastic, and then we can start making some nice profits on the robot. So let's go and have a look at your indices and gold. This is gold. I've gone back to the white background. So we made a sell. They've gone long, so we should be falling. So this is currently a fake wick. It might be looking at the treasury yields, to be fair. And so this is currently fake, this wick. That's just being naughty. It's probably trying to induce more positions, trying to induce more longs maybe, but we shouldn't be having a wick below because they've gone long, right? So this is phony. So keep an eye on gold. We should be coming down, right? S&P, and we'll do US 30 and then DAX. That's cool. So what's happening here? They've gone less shorts, and we're going to make a supply on this candle. So thank heavens that this is, if this falls, it's going to be nice because it will present some opportunities for the next leg. Because at the moment you don't really want to be buying up here, you don't really want to be selling up here, because you're selling up here, you're fighting this big trend. If you're buying up there, it looks really toppy. You know, so you don't really want to be entering this particular instrument until we've actually dipped. So you want to get the opportunity to buy the dip, but it needs to dip first, and that's just why it's so boring. Done US 30, didn't I? Oh, okay, all right, that's kind of rubbish. It just froze a bit. Okay, yeah, US 30. So I thought maybe they were gonna go long, but it looks like they it did tick up a little bit, but now it's gone flat. So there's them selling it, and so obviously we pumped. So if they start buying, then it will fall. So US 30 isn't in a great position for it to fall currently, but the S&P is in a better position because we've got the crossover. And DAX, I probably suspect this is being naughty. So that's fine. We should be wicking above. That would be normal because they're going long or less short. Okay. I think for the for the case of these videos, when I say when they're going long, they might not be going long, but less short, because what's happening, the bears are in and they're getting blown up. But I don't know, it's hard to say. Maybe they're looking to buy. It's potentially this is a late bulls, maybe. It's also worth noting that we've had a wedge break as well. Yeah, we can do this, I guess. So we've had a break. It's not. You get the idea. And then yeah, that's fine. So it's basically we've had like a price squeeze. So this is actually quite bullish technically. Sentimentally, it's made a risky sell. So perhaps we might get a retest of this upper diagonal there, and then it'll be a nice buy opportunity. But it needs to fall first. So, and then if we're going to rally today, I'm going to be taking the day off. I'm probably going to go down the pub for lunch, because there's no point looking at the market when the indices are pumping, because it's just causing a lot of nonsense and stuff. You know, it's hard to trade because you not really want to get at the top, and you don't really know when to buy. You need it for it to fall first in order to buy, but it's, you know, it needs to fall. Alright, so that's the caveat, isn't it? Remember, everything hangs on the risk appetite on the indices. So if you're trading the dollar, or you're trading the yen, or anything like that, or trading the Aussie, then you want to be checking your indices. And if these fall, it's going to impact the FX a great deal. So you've got to be careful, and I'll speak to you guys soon. So I'll try and get the bulletin done around about this time tomorrow. I didn't have much sleep, but I feel okay. So we'll see how we go. And remember to trade safely. I'll speak to you guys later. I wholeheartedly recommend fxsi.com and their indicators for MetaTrader 4 and 5. It's a 7-day free trial, so do have a look. There's no credit card required. You might be lacking in some sentiment awareness, analysis, and it does complement technical and fundamentals very well. Especially if you're very technical, you could be missing out on some sentiment, or if you're particularly fundamental, you could be missing out on some sentiment. This is like a sweet zone. It complements both, and it gives you a very strong bias about direction as well. So technicals are great for direction, fundamentals are great for direction, but the sentiment sits in between. Okay, and so perhaps if you're missing out on some sentiment awareness, these are the best indicators in existence in the world for that. And then you can have a look at this. You've got a 7-day free trial, and you've got your order book. and you've got your indicators, including the ratios, which are amazing. Just look at my videos on my YouTube channel and you can see how powerful the ratios are, and you can have a look. Just take your time. You've got 7 days to trial them, and if you don't like them, then that's fair enough. You don't have to renew, but we do have a code if you want to, and it's just the QDB code, and it gives you a 10% discount, and that's it. So have a look, see what you think, and like I said, it's a 7-day trial, so you don't have to renew, but I think you'll probably find you will renew afterwards, because the order book and the ratios and the stop loss clusters as well are amazing. The stop loss clusters are great because you know where to target. Okay, so that's where you take profit, where people get stopped out. Okay, and that's it. So just a quick plug for the fxsci.com, and enjoy your day.